Good morning, everybody. It is 8:20 a.m., November 29th, 2022. Um, this market's just got so much headline risk, but we are in range or balancing. Um, let's get into the watch list, then I'll go into some news. Okay, let's look at what's going on in the markets here. We got Bitcoin's up 1.94%, crude is up 1.79%. Um, let's see here. Nasdaq's up 0.26, the Russell's up 0.22, ES up 0.12. Dow is down 0.08. The VIX is down. Triple headed monster coming 2.3. The dollar is down 0.3, and the 10-year yield is down 0.54. Okay, let's talk about some leaders and laggards in the stocks. Okay, BABA is up 5.11% pre-market. Tesla's up 1.16. Nvidia up 0.94. Any laggards here? Not really. Let's talk about UPS. Just got an upgrade. So they're up 1.5%. Of course, you got Chevron and Exxon because oil strong. Laggard, Visa's not much of a laggard. It's 0.13. Let's talk about sectors, which will be no surprise from what I said before. Energy is up 1.2%. That's really the only one that I would say is any significance to sectors. Okay. Let's talk about some things in the news. All right. And what's affecting stuff. Okay, or what happened yesterday. All right, I'm gonna bring up the SPY chart here and let's talk about what's going on. All right, because I got important things I want to talk about in that regard. Okay, so as far as news, there's a lot of news that just came out. Okay, so why is crude up? Why is BABA up? Right? Why is Apple up? China is loosening up their policy. They're going to vaccinate the elderly. They're going to take a less harsher stance. This strain is less dangerous. That's what they're talking about. Okay, so that's one thing from the China front. Hence, BABA's up. Right now, second thing, eurozone inflation eased. The eurozone inflation has eased. Germany and Spain. Okay. We have some Musk going against Apple, and obviously I already talked about it. But when China is saying they're kind of looking at a reopening, oil is going to take off. Hence, will cause more demand for oil. That's why oil's up. Okay, that's what's going on right now. Now, what happened yesterday? Right, a lot of Fed speak, a lot of very hawkish Fed speak from Bullard and Williams. They were just very hawkish, talking about higher rates for longer. Inflation is not going to go down very easily. They're looking at it small change lower for the next year, and then the following year a little lower. So that like sent the markets going down yesterday. Now, in the grand scheme of things, if you look at the charts, we're in this range in the SPY from 402.74 to about, I mean, we did come down here, but really the low is 392. We're at 396 right now. Okay. So yesterday we gapped down, we pushed down here, and we came back down to the low of this day, which is 1122. That's where we came. We kind of closed below the 9 daily EMA, which we haven't done. All right. However, right now, where we closed at 395. We're at 396 right now. So we're a little higher. Okay. Let's look at the Qs. Qs, we have our range too, right? We have a range basically at 280 to about 289. That's the range we're playing in. Okay. I mean, we could bounce because we have the huge CPI on December 13th and FOMC on December 14th. Now, I don't know if we balance for that long. That's 2 weeks from now. Because that is really significant news. I mean, we do have non-farm payrolls in unemployment numbers coming this week. Those are pretty big. It might make us jump out of this range, but the big one is the 13th. The 14th is December. Excuse me. So we're in a range. There's not much to talk about, all right, until we break out of this range. As far as micros, like looking at it intraday stuff, there's not. We're in a range. So, but I want to talk about these levels. I talked about them yesterday. Now let me show you what I'm talking about here. So in the SPY, this is all we need to know. Okay, I talked about it yesterday. But the most traded price, okay, of the month, it just happens to be the year, is 396. You can see right here where the market is right now. Okay, it's also the most traded price of this week happening, a prior week. It's just a huge level. You don't want to see us hang out below this level. And then we have the support of 390. So first level defense 396, second level 390. Everything changes if we break below this and we break 390. That's the important levels I'm talking about. Okay, in the Qs, most traded price 285.83, called 286. We are below that price, so already a little danger in the Qs. We're below it. Okay, last line of defense 280. 280. Okay, 286. You want to get any chance for these bulls to get some legs, get above 286 and hold it. We're below it now, so you're losing right now in the NQ. But the last leg of defense 280. 280 is the key support level. Okay, 280 and a half. That's just the levels we got to look at. Huge levels. Okay, let's go to the triple headed. Okay, let's go to that triple headed monster. First, we start out with a 10-year yield. 10-year yield still trending down. Okay, still trending down. We're at a support level here, 3.6, but we're still trending lower. Until this changes, I think we stay in a range, because this is the smart money. We have to watch where this is going. Okay, this could just be foreshadowing a Santa Claus. Okay, but we got a lot of news coming, and this market's moving on news like crazy. Okay, so let's look at the VIX. VIX now got elevated yesterday, gapped up. Now we're in a little bit of a range here. Okay, we got pending news. We got Powell talking tomorrow. Powell talking tomorrow is huge. Okay, I believe it's 1:30 he's talking. So that's going to be like today. I don't know how much will happen today, but that's a market mover tomorrow. And probably the market will move on every word that he says. So, and then you got non-farm payrolls on Friday. So let's see. Dollar. The dollar caught a bid yesterday. And then, look, we kind of got a nice wick put in. And now we're at 106. So you got a support here. Let's draw that support in. Right here, 105. It's been hit once, twice, three times now. Okay, now we have a double top here. So I'm going to get rid of this. Let's draw our little resistance line here, 106.7. This is a little range we've been in. Okay, so I'm going to set an alert here. We'll make this a key resistance area. Okay, so I'm going to watch that, and I might as well set an alert at the support level. Okay, got that in there. All right, so in a range, bigger range 107 to 105, smaller range 106 to 105. We have to see hugging that 200-day moving average. Okay, now let's look at the Dow really quickly, because the Dow's been screaming, right? Let's see, this 3 days have been destroyed by this one day. Yesterday hit the 9 AM daily. Okay, well above the 200 moving average. But this is really, we have to see with the Dow. The Dow doesn't. It's not something you look at to look at the whole representation of the market, because it's only 30 stocks. But just want to see. Let's look at the Russell. Russell is peaked above the 200-day moving average. Now it's had a big losing day yesterday, went all the way down to the 20 and the 100-day moving average. All right. In this channel, you can see this trend line right here. It literally caught it. So we have to see what that does. It's hitting this trend line. That's 1, 2. This is the third time. Okay. So it's pushed off it right now in pre-market. So that's it for that. Let's go look at the profile. Let's see what futures are doing. All right. All right. Where's price? Right? Price is right here. 39.71. So we did make a high here. Here's the high in the overnight, 39.90, and we're at a low here, 39.68. Here's yesterday's session, high and the low. Okay. Now we're inside yesterday's session, which is going to hard to read, right? But there is a way that I look at the market. Okay, there's a couple things here, and we'll talk about those monster levels in the futures as well. So, what I like to do is we have single prints here. This is emotional selling from yesterday. Okay, and we have this like caused a spike lower, cut through these important areas that I talked about. This fiery box, okay, is the most traded price of the year. This is the most traded price of the month. This is our line in the sand. All of this is the line in the sand for this market. You don't want to accept price below this area because that is very bearish. This is a huge level. I can't stress it enough. This is how big this level is. This determines, I believe, if we hold below this to the end of the year. Now, of course, we could always dip below it, come above it. That's even bullish too, but you just don't want to see below it. Okay. Now, here's the spike. Starts here. This is how we're going to look at this today. This is how I look at this. That's the spike. Okay. This is borrowed from Shadow Trader Peter Resnicek. Very easy way to look at this market. If we accept prices inside this spike today, that is bearish. That is accepting this move lower. Okay. If obviously we're below it, that's even more bearish. Okay. But if we start to accept prices above, up here, that is more bullish. You're negating these prices down here. It's like an auction, this market, right? This is the prices we went lower with. Right now, price is here. The market's accepting the prices lower. That's what the market's telling us right now. They're going, all right, these prices seem cool to me. That's what the market's saying. Okay. Above it, they're saying, we don't agree with these prices. And lower is saying we're going lower. These prices need to go lower. Okay. So that's what I'm going to look at today. Can we get above this spike? Can we get above the overnight high? Okay. Let's look at the NASDAQ. Look at the NASDAQ, right? Here's the area again. right here. Fiery box, right? That is the most traded price of the year. We dipped below that yesterday. You can see we dipped below into this demand zone. And we pushed out of it. Okay? We pushed out of it. And here's our play. Here's where, our playground is. Now, I don't know if you can see my mouse all the way, but you can't. But we have a bracket here. Basically, extends from here. This is the bracket above, and this is the bracket above. This is the highs and the lows of that bracket. Basically, this profile on the side, the highs and the lows of this profile is the bracket we've been playing in. Okay? We don't want to go below this level and hold prices, accept prices lower. You don't. Now, down below this little orange box used to be the most traded price of the year. So it's really this whole area, right? Just don't want to go below that. It's the most traded price of the year in the last year, a year ago. So this level, these levels, both in the SPY, ES, whatever, Nasdaq, triple Qs, I showed you in the SPY and the QQQs the same levels. You don't want to accept below these. I can't stress that enough. That is very bearish. Okay, if we defend them today, if they get defended, then we're probably going to go back up to here. And then we're going to play again in this area, waiting for more information. Okay? So it's just very important to pay attention to those levels. Here's the low. Here's the high of the overnight. Here's the high and the low of the overnight session. Price is right here, 116.41. Here's the spike. We're accepting the lower prices right now. But, and this is a big but, I'm going to say it again, this level here is a huge wall to get through. That will not be easy for this market. So don't get fooled into, now again, volume and a big catalyst, we can push through anything. But if we don't have that and the market kind of starts coming down, I'm not going to short this. I don't want to get caught in the hole here because this level is monstrous and we can rip your face off. I'm not saying you can't scalp it, but I'm just being cautious because it's such a big level. Okay? All right. Now I'm going to show you these levels again. They'll appear up on my 60-minute chart. I'm going to give you my watch list while I just bring that up. Alright, let's look at these levels again. I can rehash this again. That's how important these are. On the 60-minute chart, okay, you can see right here it's kind of covered up with 39.66 is the most traded price of the last month and the most traded price of this year and the last year. That's how big it is. Okay, you can see the node popping out here in the profile. Okay, look at the market. Dip below it and rose up. Dip below. That's how strong this is. Look, we came down. Oh my God, are we going lower? Nope. Look again. We're stopping it again. We hit here again, and the market's pushing up. It's just a beast of a level. Okay, you accept below it. That is not good. All right. So We really just have a resistance of 39.89. Okay, support 39.69. But this is not calling for a short right away because this levels is so huge. Market needs to accept, meaning accept would be breaking it and getting more candles below it, holding it, building value, and then you might have a chance. Not going like this and this. Okay. Okay. Let's look at the Nasdaq. You'll notice the levels too in the Nasdaq. Here we go. Now the Nasdaq has a little more of a ping-pongy action here because we have the most traded price of the month up here in the turquoise box. Okay. Most traded price of the week up here. But we had the fiery box, and you can see it right here at this hot pink line. 116.03 is that most traded price of the year, and a year ago. Huge level right here. Okay, look what happened. Ripped below it, couldn't hold it and accept, ripped above it, went all the way up here. Now obviously there's the last candle just ripped this support level out. Okay, that's not really important. That's just price action. Okay, you need to look at the big picture. So look what we did yesterday. This is what I said was the chop zone yesterday. Okay, because you have the most traded price, the most of the week and the month up here, and the most traded price of the year here. Look what happened. Look what happened. Came up, went right into the most traded price of the week. Came down to the month, couldn't hold that, went right down to the most traded price of the year and ripped up. Why do I talk about this so much? Look at these levels, right? I see them work constantly. Now, let's look at the resistance, 116.99. Okay? 116.99. We're just in a very choppy area, okay? We need some news catalyst to make this get out of this area. Okay? Now support here we got at 116.11. That's what we're looking at today. We've been in this range for a little while now. But the bigger range, okay, the big support level, the last leg of defense. Okay, last leg of defense is this 11528 level. You can see it's been support. That's our last leg of defense here. I believe that was 280 in the triple Q. 115.28. That's the monster level. Okay, that's the point of no return here. I think 390 in the SPY, right? That's the last level of defense. Now, I didn't give you that to the ES. The ES, let's see, that last leg of defense. That last leg of defense in the ES, just want to give you that level. It's 39.42. Just like 390 in the SPY. So that level's here. Look at all that support. Okay? That's why I wanted to give you guys these levels today. How important they are. Alright. So you can probably tell, like, until we get out of this range, I'm not super excited about, big trades. Because we're just balancing. And there's so much news. There's so much news. Okay. Now, let's go over to the market profile and let's see if I can try to make some sense of what we're seeing here, because it's not easy. Okay, but we will do it. We will do it. Okay, so let's just start off by saying our last line of defense, 39.42 in the ES, 115.28. You don't want to see those break. Okay? That's our last leg of defense. Okay. So we have a big range of yesterday, and we're inside it. Okay? Now remember, we talked about the spike. That's going to drive a lot, right? So as I'm speaking, the ES is basically flat. The Nasdaq's slightly up. Okay, you can see we closed here, we're here in the Nasdaq. We closed here and we're here in the ES. Okay. All right, so let's look at what could be bullish. Now, if you do notice one thing, we opened here in the overnight, went all the way up here. We were 100% net short. All of these guys are gone now. You don't have longs anymore. They're not going to get hurt. Okay? They're not going to get hurt. Now, what we do have is everybody short in here. Closed here, right? So this volume from yesterday is the shorts. They're not nervous if we open up here. Okay? Their position's safe. If it was up here, that'd be a different story. Okay? So let's look at what could happen today. Okay, let's look at a bullish situation. Number one, let's look at this situation right here. Okay, we're at this huge level, okay, that I keep talking about. This zone and our last leg of defense here. This is really just the test of the market, of the bears, how strong they are. Okay, I would be just being honest. If we can't accept in here and we start pushing out of it, I want to be long today because we've been in a two-sided trade range and balancing. Okay, if we can't make it down here without some type of really weak market, we're gonna push higher again. So what I could see happening is we can push down, maybe even test yesterday's lows. Okay, even drop into this demand zone. But let's just say we pop out of this huge level. You want to probably be long. And let's see if we can go to take out the overnight high. And then we have some shorties here. See this volume here? Then we're going to test those guys out. And maybe we test the highs of yesterday. Okay? Now, bearish would be very hard. Very hard. But I could see us opening. Okay? Pushing up. Finding resistance in the supply zone here. Hitting the 9-daily EMA. Coming back down. Now, taking out those longs. This is like not as likely, I don't think, but I have to give you scenarios. So we're pushing through that most traded price of the year and the month. Come down here, probably get some support here at the lows from yesterday, and then we can push down here to that last leg of defense, 39.42. And be honest with you, I would expect a bounce, maybe. If we go lower, then look out. Okay. And that was, let me just put that was number 2. Number 3, door number 3 is usually going to be balancy. Okay. So we already know this is the most traded price of the year and the month, right? So we could very well push up, come up here and balance. We could push down, come back up and balance. Waiting for more news. Waiting for Powell maybe tomorrow, right? Scenario is really not going to be much different in the NASDAQ. They're going to be a carbon copy. Okay, so 1. Okay, same thing. I think we can push down. Here's this key level. What should the price of the year? Here's our last leg of the fence, 115.28. So what I could see happening, possibly going down, thinking everybody, oh my God, we're going lower. We hit yesterday's lows, and then we bounce above this, and you got to be long here. You're gonna squeeze the shorts that thought we were going lower. Okay. Then we're gonna travel up to the overnight highs into the supply zone. Probably get some chop. Maybe get into here and test here. Go back into this most shredded price of the week, which is also the highs of yesterday. I'd be shocked if we go higher, but possible. Bear. We have to cut through all this, which, like I said, is going to be hard. We need some news. We need some really bearish something happening to do this, but it could happen. So I could see it definitely pushing up, finding sellers, going through the most shorter price of the year, tagging yesterday's lows. All right. Now this is a demand zone, which could get some pops, but we hit this last leg of the fence. It could pop, or we push down lower. Right? I don't know if we're ready to break out of this range yet. But there's more Powell and non-farm payrolls, unemployment for this week. Okay. And door number 3, we go with good old balance. Okay. So the areas here, okay, we have 3 areas that we could balance at. But I could see us just pushing up, maybe even holding up here and balancing up here, pushing down, coming down, and then we balance here. That's what I see today. And I need to see a lot of acceptance below these areas for me to say I'm shorting. It's I think it's hard because these levels are so strong. But if they do break, that means that if you break those levels, the move lower is going to be very violent. Okay? So that's it for me, guys. Please give it a like, a comment, a subscribe. Ask me any questions. Okay? Anybody's confused on the levels I use or anything like that. Okay? I welcome the questions. All right? You can see why these levels, I track these levels. They work. Okay? I make decisions off them. So I wish everybody good luck today. Stay green. Remember, tomorrow's Powell. So look out for any catalysts today. Okay, that's what's moving markets, headlines. All right, that's going to be it for me. I will see you guys tomorrow.